Hi, this is Andrew with Mock 2 Drop, and in this video I want to go over a concept in the financial reporting and analysis topic for level 1, which is comprehensive income. So my goal of this video is to break down this concept to make it a little more intuitive. I'm going to discuss the difference between comprehensive income and other comprehensive income. And lastly, I'm going to go through an example of how to calculate comprehensive income. So the first thing I want to go over is comprehensive income using this visual. So comprehensive income is the change in equity of a firm, which includes both net income and other comprehensive income. So now what is other comprehensive income? Well, this includes 4 types of items that are not part of the net income calculation, but they also contribute to changes in equity. And these include foreign currency translation adjustments. This is basically saying if a firm owns a foreign subsidiary, any changes in the exchange rate can affect the values of the assets and liabilities, which flow into the parent firm's equity. And the second and third types have to do with unrealized gains for derivatives and certain types of securities. The last type of item included in changes of equity would be costs for a firm's pension plan. Now, if you notice for the third type, I mentioned certain securities. I want to talk a little bit more about this because there are some details that I think are worth mentioning. There are also some slight differences between, there is a difference between US GAAP and IFRS that I want to go over as well. So whether the unrealized gains and losses are reflected in net income or other comprehensive income, it depends on how the security is categorized. Now under US GAAP, debt securities that are designated as trading securities and almost all equity securities would fall under net income. I say almost all equity securities because it doesn't include equity securities which the firm has a significant influence. In other words, they own a large percentage of all the shares. So what does a debt security designated as a trading security mean? Well, basically, the security is purchased with the intent to sell it rather than hold it and collect interest and principal payments. Now, on the right side of the table, we have debt securities designated as available for sale and held to maturity. So these will be reflected under other comprehensive income. Now, a debt security designated as available for sale means that the firm is willing to sell it, but is not actively planning to sell like they would a trading security. So if you think about this in terms of a spectrum, you have a trading security on one side, held to maturity on the other side, and available for sale would be somewhere in between. So we just covered how securities are categorized under US GAAP. Now we're going to discuss how they are categorized under IFRS. So the good news is that IFRS is pretty similar to US GAAP with the exception of unrealized gains and losses for certain equity securities, which are being designated as other comprehensive income. Now, if you remember from the last slide, unrealized gains and losses for almost all equity securities were reflected under net income. But if you look at the language for IFRS, it's basically the same as what is used for US GAAP. Under IFRS, the objective, or if the objective of the firm for a debt security is to receive interest, and for selling, it would fall under other comprehensive income, which is similar to US GAAP where a debt security is held to maturity, so it pays interest or is available to be sold. Okay, so the last thing I want to go over is an example of how to calculate comprehensive income. But before we do that, if you're getting value out of this video, please give it a like. It definitely helps out the channel. Also, if you want to see more videos like this, let us know in the comment section below. And don't forget to subscribe to stay up to date on our latest videos. All right, for our example calculation, we want to know, given this information in the table, what is the amount that is reflected in net income and what is the amount reflected in other comprehensive income? And we'll be using US GAAP to do this. So the first item is a debt security being held to maturity, which has an unrealized gain of $50. If you remember from our previous slide, this will fall under other comprehensive income. Next, we have a debt security designated as a trading security, which has an unrealized gain of $100, so that will fall under net income. And lastly, we have an equity security in which the firm does not have a significant influence, and that has an unrealized loss of $30, so that will also fall under net income. So if we do the calculation, we have a $100 unrealized gain from the debt trading security, and we must subtract the loss from the equity security. So $70 will be reflected in net income. For the debt security being held to maturity with the unrealized gain of $50, that amount will be reflected under other comprehensive income. All right, so I hope this video was helpful. Again, let me know what you think in the comment section, and if you'd like to see more videos like this. Thanks for watching.